All right. Good day, everyone. Welcome to today's webinar, Values-Based Investing, which is aligning your financial and non-financial goals with your values. My name is John Melander, and I'm a partner here at Boulay and serve as Chief Investment Officer of Boulay Financial Advisers. And before we get started, just a few housekeeping items. First of all, today's session is being recorded and will be sent out afterwards. So if you want to get a copy of that, you'll have access to it. Also, if you need to ask a question or want to ask a question, please use the Q&A box instead of the chat feature, and we'll take those questions at the end. And with that, let me introduce our participants today. I'm joined today by one of my colleagues, Patrick Schneeman. Patrick is a certified financial planner, practitioner, and advisor with Boulay Financial Advisers. Pat is one of our team members that is leading our efforts in working with clients that have an interest in values-based investing. Patrick will handle our Q&A towards the end of our presentation. Our guests today from Ethic are Corinne Merriman and Jay Lippman from tech-enabled asset management firm Ethic. Corinne is a CFA and a CPA and serves as our client relationship manager. Jay is co-founder and president of Ethic. And so looking forward to hearing their presentation in a little bit. But before I turn it over to Corinne and Jay, I want to talk a little bit about Boulay Financial Advisers and how we partnered with Ethic to help clients that have an interest in values-based investing. I'd like to share a little bit about Boulay, first of all. Boulay is a financial services firm that was started in 1934. With the mission of enriching the lives of our people and our clients. With over 225 team members serving clients in multiple locations, Florida and in Minnesota here, and across traditional CPA service lines such as tax and audit, along with non-traditional services such as estate and trust, business valuation, wealth management, and many others. Boulay Financial Advisers is a financial planning-based registered investment advisor serving over 1,000 families and with assets under our care of over $2.5 billion. And we're now have 34 team members in our wealth management area. Let me move the slides along here. You can see our pictures there. I talked a little bit about our financial planning process. Wealth Nav experience is what we call it, and you can see kind of the steps that we go through when we're working with clients. And the investment strategy is certainly part of it. And hopefully you'll get a lot out of today's session. And with that, I'd like to turn it over to Corinne to set our agenda, and who will then introduce Jay. Corinne?
Thank you so much, John, and thanks to everyone on the call today. We so appreciate your time and your curiosity today. Jay and I are thrilled to be with you. So John's done a great job here introducing us and how Ethic and Boulay are going to be working together. And Jay and I would love to just give you a little bit more background on what it means to invest in values-aligned investments. And part of why kind of Boulay are such thought leaders in terms of bringing us to speak with you today and for this partnership going forward. We'll then provide you a little bit more information about Ethic and the opportunity to invest in a portfolio, and then absolutely leave time for Q&A at the end. So one other item I want to touch base on before we kind of jump in here is I think as we go through this presentation, you'll see a couple of different phrases of ESG, sustainable, personalized, and values aligned. We don't mean to confuse you with the different words that we're using here. There is a lot of jargon in the industry, and the industry kind of prefers things like ESG and sustainable, whereas here at Ethic and the conversations we've had with Boulay, we really are founded on this idea of that your portfolio should express your values. And so you'll hear us use the phrase values aligned a little bit throughout today as well. So I just wanted to lay out a little bit of that for you as you kind of have these slides presented to you, but I'll turn it over to Jay, co-founder and president here at Ethic, to share with you a little bit more about the founding of Ethic and why we're in front of you today.
Corinne, thank you very much. And John and Patrick, it's an absolute pleasure to be here. And for everyone listening, thank you for dialing in. As we go over to the next slide and we provide a little bit more context to, who Ethic is, what it is that we do, stepping back into why we founded the business 5 or 6 years ago, it was with the belief that investors should be able to not only understand what it is that they value, what it is that they prioritize, what matters to them in their lives, but they should be able to reflect those issues in their portfolios. And one of the biggest things that we recognized early on in founding the business, what we kind of, when we were just a small group of people working in an apartment, was that it was very difficult for people to actually define what it is that they understood, but also have that reflected in a personalized way, because so many of the investment structures that were out there were all one size fits all, were vehicles that were made to fit every single investor in the country, and they were being told what their values were as opposed to it being the other way. And so at Ethic, what we've built is a technology solution that allows our community to really invest in something that does reflect what it is that matters most to you. And that's what we're going to be going into much more detail about. As we do so, we're going to be looking at some of these numbers, right? As you can see here, this is something that is exploding in demand, right? The demand for ESG has gone up dramatically. And when you actually look at the market and survey the investors in the market, the numbers actually speak for themselves, right? 91% of those clients under 45 communicate that they want to incorporate at least one value in their portfolio. 76% of all clients are actually eager to be introducing values into their portfolio in some way. And so as we look at ESG, as we look at sustainable investing, as Corinne said, what is it that we're actually doing? What does this actually mean as it relates to a form of investing that is seeking a financial outcome, seeking to give you, what it is that you need from a financial performance investment, but also from something that and can be comfortable with is actually reflecting your values. And so as we look to the next slide, what is this form of investing? Well, an easier way to think about this form of investing is about being more intentional about investing itself, because for 100 years or so, investing has actually used the same system to determine whether a company is a fit or not for a portfolio based on the financials, right? Since the 30s and 40s, with the Securities Act, it's been very simple what information has been utilized from a fundamental analysis basis to determine which companies are a good investment and which companies are a bad investment. Well, with ESG investment, which means environmental, social, and governance considerations being included in the mix of determining which investments fit or not, what you're doing is you're saying, well, we're going to take that financial consideration. We're going to use that financial information, but instead of just using that, we're going to couple it with all of this additional information or this additional data about how companies actually interact with the world around us. Because companies don't act in isolation, right? They have a huge amount of employees. They work within communities. They use natural resources. They use human resources. The way that they run their businesses actually is a huge determinant of their long-term performance. And so as ESG investors, as sustainable investors, what we're doing is we're looking at the information about the relationship between companies and the outside world, and we're using that to determine whether or not those companies align with the values that we propose. And those values can be very unique to an individual, but they can also be more aligned with what's going on in the world. And as you can see in this slide, something like racial justice, climate change, health and wellness, right? These are all issues in the last year that have been increased, they've increased in visibility, in relevance, and in, the amount that people talk about them. And as a result, these are the things that people want to be incorporated in their portfolio from our experience. And so when we talk about what ESG investing is, it's a way of being more intentional about building a portfolio that seeks that financial performance, but also seeks to align with the values that matter most to you, either because of what is going on in the world around you or just generally what your values are. As we look to the next slide, we can look at the demand. And this is something that we have, when we founded the business 5 or 6 years ago, we were confident was going to happen. We didn't think it would happen quite so dramatically. But 2020 was really a turning point for this space because so many more investors demonstrated that they wanted to start living multiple areas of their lives in a more values aligned way. And we think that obviously the unique events of 2020 was a big accelerant for that. And statistically, as you can see here, in Q4 of 2020 alone, we actually saw essentially almost as much flow into ESG investments as the entirety of 2019, which is a dramatic increase, which demonstrates that this isn't just a feel-good strategy. This isn't just something that people are talking about. This is actually where the market is going. And the exciting thing about this is that as we think about being investors, as we think about the kind of impact that we can have, the point of ESG investing, the point of sustainable investing, is to change the nature of relationships between the companies and their resources, right? To make companies act more responsibly, to make them be more considerate of their impact on the planet, to be more considerate on their impact on structural societal issues like gender inequity or racial justice. And this amount of assets that we're seeing here is the kind of amount of assets that we need to see flowing in order to actually make companies aware that they do need to act more responsibly, which is behavior we're already starting to see change, which is the most exciting part of this form of investing, is that we are seeing companies change their behavior as a result of consumer pressure, but also the way that people are investing. So the next slide, if we just jump forward, why now? What is actually catalyzing this huge amount of demand? Well, there's a number of answers to this, but our favorite explanation to why we think that people are demanding this change in investments is not actually necessarily people putting their hands up and saying, I want sustainable investments, I want ESG investments. And I'll get to why that is. And the explanation kind of goes back to about 20 years ago. Because if you think 20 years ago about what people were eating, right? You could not, for the life of you, get an acai bowl 20 years ago. You couldn't get, you couldn't spell quinoa. I still can't spell quinoa, right? But the fact of the matter is that 20 years ago, consumers did not put their hands up and say, I want healthy organic food. They put their hands up and they started to ask, what is in the food that I'm eating? And then 20 years later, because of that demand for transparency, you actually saw a huge spike in demand for cleaner alternatives, which then led to the organic food movement, right? You now see this proliferation in Whole Foods. You've seen this proliferation in juice bars and organic food in all of the major chains. Now, we think that what's happening in sustainable investing is the same pattern, where what you're seeing is not necessarily investors or consumers, in our experience, putting their hands up and explicitly stating that I want a portfolio that it has less carbon, but they're putting their hands up and saying, I want to know where my money is. I want transparency. And when you give investors that transparency, when we work with investors, with Boulay, with their clients, and we give them the experience to say, here's transparency, here's a look at what is actually in your portfolio, what is your money doing? Then when they realize where it is, they want a cleaner alternative, which then drives the demand for sustainable and ESG values aligned investing. And so what allows that crucially is data. And I know that data, has a lot of different meanings and a lot of different, but data is information about what companies are doing, right? It's which companies are emitting the most greenhouse gases, which ones are using the most water in their production processes, which ones are actually being discriminatory in their hiring and firing practices based on gender or race, which companies are paying the executives way too much, and as a result, giving them the wrong incentives for long-term growth. So values aligned investing, ESG, why is it exploding now? It's because the demand is coming from a demand for transparency, and the data is now very strong to allow us to actually determine which companies do and don't align with those values. There's always the considerations as well of the fact that, there's the tax considerations that these kinds of portfolios allow. And then finally, the performance, which obviously looking back, we never talk about performance going forward, but the ability to actually look at portfolios looking back and say, well, ESG has not been a concessionary investment. This does not have to be a conversation about losing anything in order to invest with your values, has made people much more comfortable investing in this way. But I'm going to hand it back to Corinne, and we're going to keep driving forward, but I'll be here for the Q&A.
Thank you so much for that, Jay. Really set the stage for us in terms of kind of where we're at in the industry today and the catalyst for creating Ethic. So kind of who is Ethic today? John, if we want to jump forward here onto the next slide. At Ethic, we exclusively partner with financial financial advisors like the group at Boulay to create personalized portfolios of individual stocks based on your values as their clients. So in that process, we occasionally get the question of what am I giving up, or what's the trade-off if I'm going to express my values in my portfolio? And really, as Jay highlighted, the tech-enabled piece of this is part of our portfolio management process, which allows us to essentially mirror the performance of the market. Say, for example, the S&P 500. Our technology allows us to closely track that, the performance, the key characteristics of the S&P, while also aligning the portfolio with your values. So in terms of what you can expect from Ethic, you can expect a cost-efficient, tax-sensitive portfolio of individual stocks that tightly tracks the benchmark's performance, mirrors the benchmark's performance, and aligns ultimately with your values and the issues that are most important to you. In terms of driving forward to the next slide, I want to give you a little bit more background on who we are as an asset manager. We want you to feel like you know us and who you would be investing with through your Boulay advisor. And so a couple key parts of what makes Ethic is it's the really at its core is the most diverse team that Jay and I have ever had the opportunity to be a part of. We actually hail from 15 different countries, as you can tell from Jay's accent, but we're also 40% people of color and 50% 50-50 male-female. And so we have a really diverse team here, which is a core principle on which we were founded, and is a principle we will also emphasize in your portfolio if that's important to you as well. As Jay highlighted, the industry as a whole has seen incredible growth, but as more investors have really started to think about the impact that their money can have, and Ethic has also seen that growth. So over the last 5 years, we've seen that growth, but even over just the last 18 months, as Jay highlighted, 2020 was a real reckoning for investors as well. And we've seen our assets grow by 4 times over the last 18 months. And then this final piece here, perhaps most importantly, is we frame everything in terms of the issues that we're looking to have an impact on. So today we cover 19 issues across the environmental, social justice, and corporate ethics spectrum. We currently manage more than $1 billion in assets, and 100% of our portfolios are values aligned or sustainable to have impact on those issues. So, we've highlighted a few so far. We can absolutely share with you the list of all of them, but they include things like climate change, human rights, women's rights, racial justice. And those are the core issues that we were founded on, and we're really proud that 100% of our assets are working towards impact on those issues. John, if we want to jump forward to the next slide to just cover a little bit more about what's informing your portfolio. We've talked about everything so far really at this issues level. And so we wanted to just share a little bit about kind of the data behind it. Jay started to mention how comprehensive the data is now in the industry. We specifically rely on 5 different sustainability research providers to provide us with the data about company behavior, about policies and practices that are or are not aligned with the values that you care about. And so what's really important about that to us is that those 5 different data providers really complement one another. And if you're coming into this call familiar with other sustainable or ESG strategies, you may know that most other firms only use 1 or 2 providers, but for us, each of those 5 providers really have different strengths and ultimately help us build a more robust strategy and approach to the issues that you care about and that we care about. We also have great coverage across US developed, international, and select emerging markets. So what that means for your final portfolio is we can still target the overall diversified exposure your Boulay team has recommended, but just through a values aligned lens now. So that's really powerful as well in terms of making sure you have a diversified portfolio. In terms of moving to the next slide, John, we've talked a little bit about the issues we cover and the data informing them. So far, we've been partnering with John and Pat and team for about the last 9 months. So, and part of that partnership has been already meeting with the team of thought leaders at Boulay and creating a strategy to have available for you today that is diversified across that standard equity exposure of a global exposure, and also emphasizing issues that would really resonate with a lot of you as their clients. So what you can see here on the screen is that we already have kind of a pre-made on-the-shelf strategy that's comprehensive across impact on the environment, on social justice, and concerns around corporate ethics or well-run companies. And so this is one kind of lens at which we can approach your portfolio to make sure it's values aligned, that's available to you today at Boulay through this partnership. And what you're seeing here is really the mission statement for your portfolio. And so with this mission statement, this is the way that we're approaching your portfolio. And then John, if you go to the next slide, you'll actually then be able to measure what that mission statement means for your portfolio. So what you're taking a look at here is examples of ethics impact metrics. And so what this is it really, Jay highlighted transparency as being really core to the founding of Ethic. And that's exactly what you're getting from our impact metrics. So these are just a couple of examples, 2 environmental examples here, and one of our social justice measurements as well in terms of women in the workforce. And what you're getting a feel for is we want you to always have transparency into how the issues are being reflected in your portfolio, and also hold us accountable as your investment manager over time. And so what you can see on kind of the leftmost side of the screen is once you're actually invested in an Ethic portfolio, you can see these impact metrics grow relative to the index that you're being compared to over time to see the impact your portfolio is having. So as part of a semi-annual or annual meeting with your advisor, you can check in on your impact in addition to making sure that you're aligned with your financial goals and all the other components of your standard meetings there. So this is a great way to really see that, what your dollars are doing by being invested specifically in the Ethic portfolio. And then flipping to the next slide, John, I think finally here, really investing in the Boulay model portfolio that we shared, the one that has climate change, human rights, and corporate ethics emphasized, is just one option for getting started with your Boulay advisor. If you're excited about having a values-aligned portfolio, but maybe some of the other issues we've kind of touched on so far today resonate more with you, you also have the opportunity to personalize a portfolio to your specific values, and then you can see the impact you're having on those specific issues. And you can kind of kickstart that process as well. John's going to talk about this at the end, but you can also kickstart that process by engaging with your advisor. And there are a couple of different ways we can explore the values that are most important to you and share with you what that portfolio and what that impact would look like. And ultimately, to Jay's point about being really proud of the companies that you're invested in, share those stories with you as well. So just a little bit of additional information as to kind of how to get started and what you can expect from partnering with Boulay and Ethic. But I'm going to turn it back over to Pat to ask and answer some of the Q&A that are coming in through the chat, unless John, Pat, Jay, there's anything else you wanted to add there.
I'll just say, I think you really hit it on the head as far as impact investing goes. I think it's one thing just to put your money into a mutual fund and not really know what that impact really is that you're using your dollars. And so the visuals that you guys provide around impact, I think, are awesome, because you can see exactly what your dollars are doing and what kind of impact. And Jay, I don't know if you have any specific examples, but also with the kind of dollars that are flowing into this area, companies are changing behavior, right? And they want to be part of that growth segment of hey, it really does make a difference on what we're doing here in our hiring practices and our environmental practices, and it's showing up in the fact that people are using their investable dollars to make an impact there. So I don't know if you have a specific example or not, but I like the fact that you're able to see those impacts going forward.
I think I may actually have too many examples, so I won't bore everyone for too long, but I think that, what companies are now realizing is that responsible business is either going to be, this shift in demand from consumers and investors for more responsibly run businesses has either become a risk or an opportunity, right? It's a risk from a reputational standpoint, also from, a business standpoint. If you're not a responsible run business, you're seeing companies have issues and get sued and, build poorer products. But it's also an opportunity if you become the leader, and especially from a branding, reputational standpoint. If you take that leadership role, companies are now realizing that that is a really powerful position to have in the industry. And whether that is Microsoft coming out and saying, we're going to be the first technology company to go carbon negative by 2050, whether that's Delta coming out and saying, we're going to be the first airline to go carbon neutral, right? They're recognizing that putting the flag in the ground and being the first mover is going to a huge amount of dividends in the future, they believe, in essentially having that reputation to be the most responsible as it pertains to that issue. You're also seeing, in what is now one of the fiercest hiring markets, right? Certain issues are actually hugely impactful to whether or not companies can hire, especially younger talent, right? It's Pride Month right now. And there's a lot of statistical data that tells us that companies that are proactive in building an inclusive environment that actually provide non-discriminatory policy to prevent from people being discriminated against based on sexual orientation or gender identity are actually much more likely to be able to hire from a much larger talent pool and actually have a lot higher hiring resonance, especially with younger employees who are so hard to hire right now because the hiring market is so difficult. So, there's so many examples that exist. I could go on forever of businesses that are benefiting from realizing if we are a good ESG performer, if we are a sustainable business, there are going to be benefits associated with that are going to either provide us more access to capital as an investment or put us in a better position as a business.
Thanks for that, Jay. Patrick, do you have any questions that have come in from our audience?
Yeah, thanks, John. Thanks, Jay. I do have one. One individual's wondering how Ethic helps educate the clients about those 19 issues and the importance of each as a way to grow knowledge of more people. So I think they're wondering how you can help them become more informed as a consumer and how they can build that into their investing plan.
It's a fantastic question because what we have found in, one of the things that we think differentiates Ethic is that when we look at an issue, whether it's climate change, deforestation, racial justice, we don't seek to simply look at the obvious, right? We want to look at the structural things that we can do to change the nature of the way that companies interact with that issue. Because if there are companies that are built in such a way that they have a vested interest in maintaining a status quo of a structurally broken system, they're going to keep doing that. And a really good example of how we educate our clients is the issue of racial justice, which we believe that our thinking around is very, very advanced because it's something that we've prioritized since we founded the business. And the way that we educate people is to actually use storytelling as a means to understand how companies are either making the situation better or worse. Because, if you look at something like racial justice, we could look at the more linear examples like discrimination, diversity and inclusion policy, how companies actually treat their employees. But if we want to solve these problems at a structural basis and educate our investors as to how they can be part of that solution as well through their investments, but also in their broader life, we have to look at the systemic connotations, the interconnectivity of these issues. And so with racial justice, we look beyond the obvious to things like private prisons, right? The prison industrial complex, which businesses are not just profiting from the private prison system, but also selling their services to the public prison system, and therefore profiting from the over-incarceration of disproportionately people of color, right? Therefore, we want to understand that relationship between those things, and in storytelling and connecting those issues, our investors get really engaged because it's not necessarily obvious, but it's really intuitive to understand that connection. Same as predatory lending, right? Predatory lenders push people into poverty and they disproportionately market to vulnerable communities and communities of color, meaning that they are perpetuating a cycle of poverty in communities of color through that marketing practice, exacerbating systemic racial inequity. The same thing with environmental racism, right? The single largest predictor of whether or not you live in close proximity to a toxic waste plant or a toxic waste facility is your race. And so these kinds of examples of how corporate activity connects with these things educates our consumers and our investors and our partners as to the interconnection between these issues. And because it is such a visceral, engaging set of stories that we have across our pillars, that's how we feel that we connect and engage and educate people around these issues. I hope I answered that correctly. Maybe I didn't. I kind of go off on these tangents sometimes.
Jay, I'll just add on that. It's such a great point, and to everything you just highlighted there. These issues are complex, and there's so much information pointing to how company behaviors interact with them in really systemic ways. And we know that that's not abundantly obvious when you look at just the holdings on your statements at the end of the quarter. And so what the clients can expect from this experience is we'll start with, typically what we start with is essentially a questionnaire of taking you through the issues that are most relevant to you. And then that questionnaire is, takes us into an initial proposal in which, we've done this with a couple of Boulay clients so far, actually had an hour-long discussion in which we've gotten in front of the clients and talked through the issues they said were most important to them and how we would then address them in a public equity portfolio and what that means for the behaviors of those companies. And then that can be an iterative process. If other things come up as a part of that conversation, we can take that back and add in other issues or adjust the way that we're evaluating which issues are most important to them. But absolutely, it's an educational experience, because we think that's a huge pillar on which Ethic was founded on, of making sure advisors and investors feel really well informed about their portfolio. So in terms of the experience, we end up having multiple meetings if clients are interested in learning more, so to ensure everyone feels empowered with the knowledge that's driving their portfolio.
Great, fantastic answers to both of you. We do have another question that came in, and it's more, I know you guys already touched on this topic, but it's more about that I would call it a misconception that by investing and targeting ESG portfolios, you're having to sacrifice some kind of return. Could you just expand on your earlier comments around your process and how you build your portfolios, and maybe in relation to how you build your index models, so that folks understand the mechanics of it a little bit?
Corinne, why don't you start with the mechanics of how we build the portfolios, and then I'll go into my earlier comments about the performance.
Absolutely, that sounds great. So yeah, absolutely, great question. And I think there's a couple different ways to talk about this, but I think what's first and foremost important to understand is we're not thinking about performance and sustainability in isolation, but they're very much two intertwined factors in the creation of your portfolio. And so what that means is we are starting with the intended market that you want your portfolio to be exposed to. So if historically, say, I know we have a well-diversified global benchmark in the Boulay portfolios today, but say we're looking for 100% US exposure, just for ease of an example. We use that as both our as the benchmark that we're targeting and the starting universe of companies. And then we essentially have this conversation around how concerned are you about tightly mirroring the exact performance of that benchmark, and how much impact or deviation from that benchmark or market you're willing to have impact on these issues. And so it's a very intertwined conversation, but the way that our portfolios are constructed is very much to have impact on the issues that you're interested in, while still mirroring the factors of the overall financial market that you want to be exposed to, with the intention of helping you achieve both your impact goals and your financial goals. Does that help, Pat?
Yes, it does, very much.
Okay. Jay, do you want to jump in there?
Yes, and so this kind of goes back to my comments about investing with more information, right? When you look purely at the financial considerations of a business, this is how investing has been done for a century. So we need to utilize that financial consideration. But when we look at the additional information, what we call full information, right, about how companies are interacting with the world around them, there is the natural component of that, right, how companies interact with the environment. Then there's the social considerations, how they're exacerbating certain social issues or making them better. But the corporate responsibility, right, the governance, is such an important factor in understanding how these businesses are actually run. So if you extract that governance component and just don't even look at the environmental or the social part, and you just say, well, we have this information about how these companies are run, about corruption, about fraud, about board level compensation, about really the quality of the leadership of these businesses, it is and has been proven to be a very strong indicator of which businesses have a lot more embedded risk potentially, or which ones don't. And I think that this is why ESG, and again, we don't predict anything into the future, we don't talk about any performance going forward, but the data in the past has actually shown us that ESG considerations are at least non-concessionary, right? They don't have to be concessionary in removing performance, and have actually been strong because there is this added level of data that is informed to say, oh, what are the risks and the opportunities that exist in this portfolio, in this data set that we have, that is a layer above simply the financial considerations. And again, this is not talking about performance going forward, but it is just based on what we have seen in the past.
Fantastic. Thank you both. We have received a few questions asking about cost and how this could fit into their current portfolios. And so maybe, John, if you just want to touch on how Boulay clients might be able to incorporate this into their models with us.
Absolutely. I planned on touching on that because I knew that was a question that a lot of people have, and if they were afraid to ask, I was going to tell them anyway. But I think if you look at the average mutual fund or strategy, most companies are going to be in that 75 basis points to 1% range when you're looking at their fees. Our agreement with Ethic is that to get access to the Boulay prepackaged strategy, it would be 30 basis points or 0.3%, and to do the custom portfolio, it would be 35 basis points. So to get to that custom level, the assets that you need in a single account would be $750,000 in equity. And for the prepackaged Boulay strategy, it would be $250,000 in equity. Of course, we'd want a balanced portfolio of stocks and fixed income and other investments. And so just think about that as whatever your risk level is, that we'd have to add in some other things to get you to the allocation that makes sense for your particular risk level. So I think that answers that question. Anything else that has come in, Pat?
Let's see here. There was, let's see. Actually, that covered the questions that have come in so far. If anyone else has an additional question they want to ask, please feel free to enter it here now. But I think just one other question that I had written down previously is, I like how you guys are talking about how investing with Ethic really helps align people's values with their portfolio. How do you see folks utilizing ESG investing in coordination with their overall charitable intentions? Because I know we have folks who give directly to churches or institutions that care or matter to them. How do you see this being a complementary way of making an impact to their other charitable goals or intentions?
Corinne, I'm happy to jump in and then you can jump in as well. What we found when we founded the business was when you ask someone what they care about, when you ask an investor, what is it that you prioritize? So often they do look at their charitable giving. But if you were to say, right, what is it that the family really represents? What is it that the foundation, really does prioritize? So few people have ever codified that narrative. So few people have actually gone through the process of sitting with the entire family and said, what is it that we stand for? What are we actually passing along to the kids as it relates to what our values are? And so this is why, to Corinne's point, which we talked about earlier with our values mapping exercise, the mission statement that we create, this document that does actually codify exactly what values matter most to people and the kind of priority of those things becomes this living document that means so much more than investing, which is why we often do this before the investments part is even part of the conversation. It's such an important part of the process to really say, well, we care about women's rights. We care about racial justice, deforestation, climate change. We want to put these things down on paper, and then it can be utilized beyond what we do, which is the passive equity piece, right? It can be used in philanthropy. It can be used in other asset classes. And we've had people, get this printed and bound. We've had people kind of give it as gifts and do it with the family, because it's just a really powerful process to actually leave that experience saying, well, it's really, really nice to get all of us bought in together and actually get consensus on what we all agree as 3 generations of the same family. Because it's a nice thing to be able to pass along to say, this is what we agreed then, and it can change over time, but it's a nice living document that can be more than simply an investment conversation.
Great.
Yeah, I think that's such a great summary, Jay. The only other thing I'd add in there is just in terms of that conversation. Yeah, absolutely. We originally kind of started of where have you given to charities in the past? Okay, that probably expresses where your values really lie, but we've also had to go the other way of going through this development of a mission statement and values discovery with Ethic and a client's financial advisor. Then they turn around and they're like, well, in addition to this, I want to reconsider where I'm giving to charity, or make sure I'm also giving to charity, or set aside a portion of my portfolio that in 5 years I'm going to give to charity. But until then, I'm going to have it aligned with the values I ultimately want to donate to. So there's just so many different ways the conversation can go, but it's just another great talking point to Jay's point of really just deepening those relationships with your family members and with your advisor as well, in terms of the power that your money can have.
Thanks, Corinne and Jay, for that. Pat, any other questions that have come in, or should we wrap things up here?
I think those are great responses, and hopefully folks learned a lot. And yeah, John, why don't you wrap it up?
Great. I want to thank Corinne and Jay and Patrick for taking time out of your day to talk about the strategy and what Ethic has done and such. So I really appreciate your time. And I know we just touched on the surface. So if there's those that are out there that would love to find out more about what Ethic is doing and how we partnered with them on their strategy, please reach out to your advisor here at Boulay Financial Advisors, or you can call the number on your screen or email learnmore@bouleygroup.com, and we'd love to have a conversation around that. So with that, I thank you again, and we'll wrap things up. Thanks, everyone.
Thank you.
Thank you all so much.